For many years now, we've been discussing about this blockchain technology as being the new era, the new paradigm shift that we need to enter in this new digital economy that is going to literally change the whole global financial infrastructure that desperately needs upgrades and global accessibility, efficiency, and more sustainability in terms of liquidity management. Now we are at that stage as we speak, and never before in the history of blockchain were topics such as utility, security, fundamentals, use cases, real world use cases have ever been as important as it is today. If we look back in the previous bull cycles, we were in the infancy stages as we matured. 2021 bull cycle was the so-called summer of DeFi, where utilities on Ethereum were really getting of age. Huge DeFi platforms such as Aave, Uniswap, and such staking platforms were really taking shape, restaking platforms, and so on and so forth. But now we're at the age where governments, institutions, savvy retail investors like you and I are looking for not just meme coins to flip or just random coins to flip, but we're looking for fundamentals, sustainability, long-term vision. Those are the criteria we go by as we choose which ecosystems, which tokens that we want to go with. Why is that the case? There is no more question in regards to the blockchain technology being the future. We're in a digital age right now, and there's a digital race going on right now, both on a institutional level, governmental level, and of course on a retail investor level, such as us. And indeed, if it comes to the tech world, there is a winner takes it all. And a clear winner has already been chosen right in front of our eyes. But if we don't pay attention, because the winner is not one that is celebrated in the spotlights every day. The winner is the one that is quietly being built in the background. Infrastructures are being built. Things are being lined up to put it in place quietly. And you have to do your research and open your eyes wide open, keep your eyes wide open and your ears sharp to even have a glimpse of what's happening. So before we get ahead of ourselves, there's a clip, and I'd like this clip to kickstart this session today. And what we're aiming to understand today is that, yes, we've been talking about the blockchain being the future of global finance. Yes, we need of a global financial system upgrade. Yes, we need of a new monetary system that is more efficient and sustainable in the long run. No fiat currency survived longer than 80 years or 100 years. Usually they're mostly collapsed after that time. And US being the current fiat global reserve asset right now, as the US dollar is, it's on its 80th year, right? 81st to be exact, because 1944, the Bretton Woods system took place, and that's exactly 81 years ago, right? So for over 80 years, the US dollar has been the global reserve currency, and as we see, it hit 37 trillion in debt. It's been downgraded. Its credit worthiness has been downgraded by Moody. It's not producing enough goods and services in comparison to their expenditures, meaning they're in a deficit, trade deficit, meaning that they have to keep printing more fiat to just cover their basic expenses, Medicare, Medicaid, and military expenditures, interest payments, and Social Security, and so on and so forth. So this means that in the future, in the near future and beyond, the US dollar will remain inflationary for the unforeseeable future until it reaches the fate of every other fiat currency before it. However, the US is not going to just sit idle and watch themselves implode and be victims of de-dollarization and be a victim of hyperinflation. They're going to make the most by adopting this new technology known as the blockchain technology, not as an option, but as the only solution. So let's start from the very beginning. And this clip is going to set us, get us ready for a kickstart in this session today, as we're going to briefly understand that this new technology has a clear win already, and a chosen blockchain, chosen ledger, that infrastructures are being built and tokenization of assets are finding their home right there on that chain. This is not about hopeful thinking and speculation. These are based on facts and infrastructures that are literally being built, and how market leaders in their own respective industries are selectively, carefully, exclusively choosing this specific blockchain to build the infrastructures of the future on. So, at the end of the day, we are in a stage where there is no denial anymore. Blockchain is the future. Digital age is the future. And to do that, to accomplish that, you need a smart contract blockchain. And the largest smart contract blockchain right now is Ethereum right now. And we also need more efficiency, as we will see. And this is exactly what's taking place. And it's going to be led through tokenization of assets. And it's also going to be the solution, like we've been always talking about. The blockchain is the solution to this current monetary system that is debt-driven, causing inflation, hyperinflation, loss of purchasing power, and consistent increase of debt. So let's tune in and listen to what Larry Fink says. Larry Fink is the current CEO of Blackrock and founder and CEO of Blackrock. We all know he's big into blockchain right now, and we all understand that he's at the forefront of tokenizing assets. So this quick short clip is going to highlight how where he stands in terms of tokenizing assets, and also what he expects of the SEC, Security and Exchange Commission, to do in terms of regulations, right? So let's briefly tune in to kickstart today's session with this clip.
As a huge believer of crypto and blockchain and tokenization, I want the SEC to rapidly approve the tokenization of bonds and stocks. That will simplify things, make things easier. Some of the tax on Blackrock would never have to vote on a proxy vote anymore, because every owner of record would be notified through a tokenization of equities. And it would save more money for more people. It would bring down the cost of ownership of stock and bonds. So those are the type of financial reforms we need. Right.
So we clearly had what types of financial reforms, like he mentions them, that we need in this new monetary system, right? We need this in order to ensure that we experience an upgrade. We can have this upgrade that we need in order to be ahead, of all of this. So BlackRock's Larry Fink, like we said, he's now the interim co-chair of the World Economic Forum, right? This just happened on the 19th, so it's just barely 2 days ago. He is now a co-chair of the World Economic Forum. That's where once a year, global leaders are meeting in a ski resort in Switzerland, in Davos, to discuss the future of the global economy, right? And now he's at the top. He's sitting at the top of the leadership. He's the head of the chair. He's the chair of the organization, of the institution. And why is this so important? Why is this so relevant to us? It's because we know that we just tuned in and heard him saying for himself that tokenization plays a major role for him. And he is, like we said, was recently named as the co-chair of the World Economic Forum, the WEF, and he shares the role with another individual known as Andre Hoffman, who is a heir and the vice chairman of Roche, the largest pharmaceutical company in the world, also based in Switzerland. So what I want us to take away from here is really straightforward. We always talk about how nothing happens as a coincidence. Things are being lined up perfectly. And if we are not keen, if we are too distracted, we might miss the whole action that is taking place right in front of us if we don't pay attention. So I'd like us to really understand, first of all, we always presented with a challenge before we are presented with a solution. So the challenge right now with this monetary system, and we heard Larry Fink himself say that this is what's needed. Tokenization is needed in order to bring this fundamental shift that we need in terms of ushering in a new monetary system. So the world is more fragmented and complex than ever, but the need for a platform. You see already there's a distinction here. There's a need for a platform. English is not my primary language, but I understand that this is singular, right? So it's a platform. We're not talking about multiple platforms here. There are no options here. There's a distinction, there's a choice, deliberate choice already made, and there's a need for one platform that brings together businesses, government, and civil society. The need for that has never been greater, right? That's the whole idea of the World Economic Forum. This article stems, by the way, from the World Economic Forum. And this is a statement from Larry Fink himself and Andre Hoffman, right? The co-chairs of the World Economic Forum. So what they're saying is that literally right now the challenge is the financial markets are too fragmented, meaning they're all over the place. And there's a need for one platform. These are not my words. These are the words of Larry Fink and Andre Hoffman. And that one platform, and that platform is going to bring businesses, government, and civil society, right? Savvy retail investors like us. It will bring us together. And they believe that the forum can serve as a unique catalyst for cooperation, one that fosters trust, identifies shared goals, and turns dialogue into action, right? The forum has an opportunity to help drive international collaboration in a way that not only generates prosperity, but distributes it more broadly, right? And this is where it really gets interesting. This is another challenge. So this renewed vision can promote open markets and national priorities side by side. This is important, community, because right now the US dollars, the global reserve currency, has been used to be as a weaponized, has been weaponized, right? To bring in sanctions. We hear all these tariffs and all that, and this has put a lot of uncertainties and fears for other nations to rise and retaliate and come up with their own structure with all payment systems. And this brought up the rise of BRICS, right? And to bring clarity in this and to distinguish the difference, Larry and Andre distinguished the difference here. They say that, first of all, we need a platform, one that brings businesses and governments and the society as a whole together. And this platform is going to open open markets on a national priority. And these nations are going to be working side by side. It's not going to be owned by a single geographic region. It's not going to be owned by, say, US or Asia or Africa, but it's a technology, right? Similar, like you can't say that the internet belongs to Africans or Asians or the US. It's a technology that everyone can participate on. So this is exactly the idea, this is the goal, this is the vision, right? So it's on a global, it's based on a global on a global level, right? Not on restricted on geographic region, but it's on a global level. So what we want to understand here is also this next article. This next article is very interesting. And let's look at what, again, this is an article from the World Economic Forum, and they're talking about how asset tokenization in financial markets, right? The next generation of value exchange. So tokenization offers a new model of digital asset ownership that enhances transparency, efficiency, and accessibility. And what I want us to take away from here is this. Key differentiators include a shared system of record. Again, remember how we discussed there's a platform, one platform. And this one platform includes one shared system of record, meaning a ledger, a flexible custody, programmability, right? This is smart contracts, fractional ownership of and composability, right, across asset types. So these are all these jargon, all these talks, all this language literally just means that we have one platform, one ledger that is has flexible custody. You can be your own custodian. You can have custodians depending on your needs. And it's based on programmability, in other language, based on smart contracts, automated processes, not needing intermediaries. And you can fractionalize your assets, your products, as we're about to make examples as we progress throughout this session. And this affects all assets. It goes across all asset types, commodities, real estate, bonds, and stocks, and cryptocurrencies, you name it. It's across all asset classes. Tokenization means literally tokenizing the existing financial assets, bringing them on chain, making them more accessible, bringing in more transparency, more efficient, and more accessible on a global scale. That's the whole point of this new financial infrastructure. So these futures can democratize access to financial markets and modernize infrastructure. This is the whole idea. This was the challenge, right? So this technology cannot be used to be weaponized, to weaponize other nations, because it's a neutral ground for everyone. It doesn't belong to a jurisdiction. No one has the right to sanction you off of Ethereum, off of a decentralized blockchain, which is a technology, right? So this is why it's considered it's democratized access to financial markets and to modernize the existing financial system that is debt-driven, that is outdated, that is not efficient, that is not accessible to anyone equally, right? And it's not transparent. And it's all about ownership, right? Digital ownership of things, and no one can take it from you. So this is what this is all about, community. Now, if we go even deeper, let's take it a step further. Another article from the World Economic Forum. And this even tells us here, let's look at the topic, how tokenization is transforming global finance and investments. So this is nothing, this article just came last year, end of last year, December 10th. And we see that all of these things have been put in place and are being executed right now as we speak. So the business case for tokenization, all we hear is tokenizing of assets, tokenization here and there. And this is not an option, it's the solution to the current fragmented, unsustainable monetary system that we're in. So the need for shortened settlement, like we said here, which improve liquidity, like we say, this is this will also improve liquidity. It's a shorter cycle right now. If you want to wire transfer funds from one country to the next, it can take up to 5 business days. If it's on a weekend, you have to wait for business working day, right? And it gets complicated. But with all of this, and then another thing is also with all these different fragmentations, like we said, all these asset classes are on their own ledgers, their own liquidity pools, their own exchanges. But with this, having everything in one place, under one ledger, under one platform, it enhances and improves liquidity, it enhances market efficiency, and it lowers systemic risk. Systemic risk happens when there's too much fragmentation, meaning things are all over the place. You have to go to a different platform to operate real estate, another exchange to do the stocks, another platform to do commodities, and another one to do cryptocurrencies. But if you can bring all of that together through tokenization of assets under one ledger, under one platform, it's more efficient, it's more secure, it lowers the risk, it's you have one part of liquidity, and it's more transparent, and you can settle things right there and there in one place. 24/7 demand. And then through this, to enable all of this, of course, it requires a new infrastructure backbone. You see that the language tells us everything. They've been talking about one infrastructural backbone, one platform, one liquidity place, right? So this language is literally telling us that the choice has been made. The choice has been made. And another thing here is this will address the risks of today's systems, which uses different technologies and lack the atomic network connectivity of blockchain networks, thereby creating technology silos like we discussed. Commodities are traded somewhere else, then real estate, and real estate are traded somewhere else, then the stocks, and the stock market is somewhere else than the bonds, and everything is everywhere. So they want to bring everything on one chain, one platform, one ledger, using one liquidity pool. And this is exactly what tokenization is all about. And there's one platform, one blockchain to do all of that, right? So to create, this will lower the creation of friction when processing transactions, right? And furthermore, by using distributed ledger technology for collateral management, financial institutions can free up substantial capital, right? So now that we understand that, we can now move forward. Another thing, just briefly. So the financial infrastructure right now is operating in much the same way it has decades, right? Relying on the same message-based system pioneered in the 1970s. So it's high time that we use the latest technology, and we can do that by mobilizing tokenized assets and connecting across participants on global markets. And this is very important. And you can only do this using the blockchain technology. Now, the next article that I want us to understand here, community, is this. All that we just read about is not just talk. It's put in action. It's happening already. And the best example, and I want us to really understand this, is we'll focus on two markets in this session. Two of the largest markets. The second largest is right here, the Treasury market, the bond market. It's the second largest market. The largest market is the Forex market. And we'll get to that step by step. So the first step we want to look at is Blackrock. They are not just talking about one ledger, one liquidity pool, one platform. They already went ahead and already launched their first tokenized fund known as BULLRUN. And they already told us where the name of that one ledger, one platform that they want to build their infrastructures on, and it's called Ethereum. It's a public blockchain, right? So BlackRock today unveils its first tokenized fund issued on a public blockchain. And that public blockchain has a name, and it's called Ethereum. So this is not wishful thinking. This is not hopeful. This is not speculating. This is a fact. We just read that we are in need of one platform, one ledger, one liquidity pool to be efficient, sustainable, transparent. We need that. We need a new backbone, right? We need a new backbone or new infrastructure. And to do that, we had to choose one blockchain, one platform, one ledger to build infrastructures on, and that ledger is called Ethereum. And BlackRock chose them to build the very first tokenized BULLRUN fund. BULLRUN fund is a tokenized securities, right? Tokenized treasuries. And this is extremely, BULLRUN will provide qualified investors with opportunity to earn US dollar yields by subscribing to the fund, right? So this is exactly what I wanted us to look at and understand, that it's not just talk, but the largest asset manager in the world chose this one blockchain that they've been talking about at the World Economic Forum. They didn't mention the name, they just spoke about it as a singular platform, a singular ledger, a singular blockchain. But here, if you come to Securitize, if you come to BlackRock, they clearly tell you the name of that ledger, the name of that platform, the ledger of that public blockchain, and it's known as Ethereum. Let's continue here. It's not just BlackRock, it's also JP Morgan, right? JP Morgan has carried out its first live blockchain-based collateral settlement transactions involving BlackRock and Barclays, the US banking giant, right? So it's not just BlackRock, but it's also JP Morgan. BlackRock is the largest asset manager. JP Morgan is the largest bank in the world based on market cap. So where is JP Morgan's collateral settlement transaction? Where did they do their very first collateral-based settlement? Using BlackRock's money market funds. They did it on Ethereum as well. They did it on Ethereum, and this is their private, closed blockchain. But nonetheless, it's on Ethereum. And also what I want us to understand here is that they used BlackRock tokenized shares, or BlackRock, the money market funds, to use as collateral, and to use it as collateral for over the counter for the derivatives market. And we'll get to the derivatives market shortly. So we see that not only BlackRock chose Ethereum, JP Morgan chose Ethereum, the World Economic Forum is talking about one platform, one blockchain, one liquidity pool that will make it more efficient, will be, infrastructures are going to be built on it, and it's going to unite businesses, governments, and the society, right, as a whole. And now we're getting names here as well. So now it's not just BlackRock and JP Morgan. It's also the largest bank in Singapore. What I want to take away from here is that this cycle, we always say this cycle is different, but what makes it really different? It's because that we'll move from private to public blockchains. Like we just saw, Onyx is still a private blockchain, even though it's on Ethereum, but it's still a closed private blockchain that JP Morgan is using. Unlike BlackRock, they're using public blockchain Ethereum for their BULLRUN token. So the individual here is suggesting that during this cycle, we're going to see how large institutions will move from their enclosed private blockchains to public blockchains once and for all, and unlock the digital era of this of the world's assets, right? And stablecoins are just the tip of the iceberg. And Ethereum is the chain for all tokenization. These are now not my words, right? Are not my words. So DBS launched tokenized structured notes on Ethereum. So let's look at this article even more in more detail. And before we come down and read why they chose Ethereum, let's briefly scroll up here. So Singapore's biggest bank. So DBS is not just some random bank. First of all, Singapore is the most well-managed, has the most well-managed digital asset clarity and regulations. And Singapore literally is the financial hub of Asia. So whatever Singapore does, the rest of Asia literally emulates and does the same. Just like with Switzerland, right? Whatever Switzerland does and sets as a standard, the rest of Europe follows suit. And just like with US as well, when US sets standards, the rest of the world also adapts to it. So Singapore is the hub for Asia. So whatever Singapore does, they set the pace, they set the stage, they set the standard for the rest of Asia to use as a blueprint to adopt. So Singapore's biggest bank, DBS, they also launched their first tokenized structured notes, and they're launching it on a public blockchain as well, just like Blackrock did. And this public blockchain they chose is Ethereum, right? And let's come down here and read why did they choose Ethereum? Why, right? So they say they chose Ethereum to issue these structured notes due to its three reasons. First of all, maturity. Ethereum just celebrated 10 years anniversary. And during these 10 years, it has a network effect. So there's the most developers, the most users, the most liquid blockchain with the most applications on them. And also, most importantly, for a bank, if you're a bank, financial institutions, what's even more important, a proven security. Not just talking about it, but proven track record. So 10 years of 100% uptime. Ethereum has not crashed, has not stopped, has not broken down, has not, none of that. Unlike Binance has crashed, Solana crashes all the time. And Bitcoin doesn't have smart contracts, right? So doesn't have a smart contract ecosystem, like DeFi ecosystem, that to build a financial economy, a global financial economy on top of it. So it's not even relevant. It doesn't even play a role in that because it serves a whole different purpose. So this is exactly why. So while private blockchains have been the preferred choice for many institutions so far, Ethereum's wide adoption makes it attractive for products that may appeal to international investors. So this is exactly what this individual was referencing to. He was talking about how during this cycle, in his opinion, many institutions are going to move from private blockchains to public blockchains. And this public blockchain is Ethereum, like we just saw. We verified it, starting with the World Economic Forum and the chair of the World Economic Forum, which currently is Larry Fink himself, who is so crazy about tokenization of assets. And now we see that we verified that even the largest bank in Singapore, their argument why they chose Ethereum is because it's wide adoption. And this makes it attractive for products, which means developers and consumers as well. It appeals to international investors because it's a neutral technology. It doesn't belong to anyone specifically. So the further say that by leveraging Ethereum, DBS positions itself ahead in experimenting with public blockchain, right? Public blockchain infrastructure for real-world financial assets. So these are not just some random meme coins that you flip, but these are real-world assets deployed on public blockchains, and this public blockchain is Ethereum. Remember how we started the session, that there is a clear winner that is already chosen by institutions. It's chosen by BlackRock, like we saw, chosen by JP Morgan, chosen by DBS, the largest bank in Europe, chosen by the Swiss government, Post Finance, chosen by UBS, chosen by Visa or MasterCard. We could go on and on. Ethereum is the choice. If it comes to security, again, the arguments were they want something that is mature, first of all, has global reach, and has a proven security. 10 years of 100% uptime. There is no other layer one blockchain that has that. No other layer one smart contract blockchain that has 100% uptime, that meets all these criteria than Ethereum. And this is the reason why financial institutions choose Ethereum as their blockchain, public blockchain of choice. But that's not enough. Let's look at some more. So, like again, Singapore's largest bank is extending its blockchain strategy by offering tokenized structured notes, like we said, on the Ethereum public blockchain, in a move that broadens access to complex financial products, right? Once reserved for private clients, but now they're opening the gates through by fractionalizing everything and giving access by tokenizing each instrument into $1,000 unit. Previously, you had to have like here, structured notes traditionally carry a minimum investment of 100,000 for one product, but now they're tokenized. By tokenizing it, they can fractionalize it to $1,000 per unit, making it more accessible and offering greater flexibility for portfolio managers. So this is exactly what they're doing, and they have high demand for such instruments right now. And again, their blockchain of choice is none other than Ethereum, right? It's none other than Ethereum. So all these nodes, all these products are on Ethereum. And this is the largest bank in Singapore. So again, what else? Another thing I want us to look at here, community, is we see how the US is already dominating. If it comes to stablecoins, US denominated stablecoins, the US is by far just dominating, right? So China considers yuan backed stablecoins to challenge US dollar dominance, right? So China is considering yuan backed stablecoins to boost global currency usage, reversing its 2021 cryptocurrency ban. We read about dominance, but let's look at some numbers. How dominant is the US? So the move comes as China seeks to challenge US dollar dominance in global payments. So dollar-backed stablecoins currently account for over 99% of the global stablecoin supply. So this is true domination. This is how dominant the US is right now. Why is this so important? Why am I emphasizing on stablecoins so much? We'll briefly understand why, because foreign exchange is the largest and most liquid asset class in the world. So as we are entering this new digital age of global payments, digital global payments led by stablecoins, whoever is leading and dominating that specter is going to literally retain their global reserve status. And this is exactly where the US is dominating. And just like it was back in 1944, whoever is dominating this new digital era, this blockchain technology, is going to remain the global reserve currency. This is why the US, there's not an option to adopt cryptocurrencies, to adopt blockchain technology, to embrace building on Ethereum infrastructure. There's not an option. It's compulsory, right? It's the only solution. So again, 99% of global stablecoin supply are US dollar denominated. So US is clearly dominating that spectrum, and China is trying to catch up by offering starting to issue yuan backed, right here, yuan backed stablecoins as well, to start getting involved on chain as well. What I want us to understand is one thing here, community. Let's start with stablecoins. Stablecoins represent in the real world, foreign exchange in the real world. I want us quickly to focus on the current market cap. The current market cap sits only at 267 billion. That's a fraction of what we're about to see. So let's keep this number in mind. It's very important. For the sake of math, let's just call it 270 billion market cap. And there's a monthly transfer volume, 3 trillion. But right now in the real world, 7 trillion, just the US dollar alone. There's a 7 trillion. JP Morgan runs 7 trillion in volume a day. JP Morgan does. And we just saw they have built infrastructures also on Ethereum. But that's beside the point. I'm trying to show how small this market still is. It's a fraction of the huge market of foreign exchange. And I also want to take the advantage and take the opportunity and show us where the stablecoin dominance is taking place. Obviously it's on Ethereum. More than 60% of all stablecoins, which in the traditional market is known as the foreign exchange market, is on Ethereum. And right now, over 99% of stablecoins are US denominated. We just read the article. This is why China is jumping on board and really fast tracking everything, trying to catch up to the US in terms of issuing global payments and issuing yuan-backed stablecoins as well. So keep this number in mind, 270, just for the sake of math. Now, why did I say to keep that number in mind? Because I want us to see how large the Forex market is, right? First of all, the Forex market, like we say, in the traditional world is known as the Forex market. Forex market means foreign exchanges, foreign currencies. But right now in the digital world, there are no other relevant, significant foreign currencies. Over 99% of the foreign currencies of the Forex market, which is the stablecoin market, is denominated in US dollar. So why is this so significant? It's because this Forex market, the stablecoin market in the digital world, is the largest. It's the largest market. And at the same time, it's also the youngest, right? It just barely came out. So the foreign market is the largest and most liquid market in the world, like we just said, right? This represents the stablecoin market. So in 2020, the global Forex market was valued at 2.4 quadrillion. That's how large this market is. Remember, I suggested that we keep in mind the number. And it was 270, right? Keep in mind, 2.4 quadrillion, not trillion, quadrillion. So if we come back here, just to refresh our memories, this is the Forex market. It's at 270 billion. And I also suggested that we understand that, let's come back over here. This market is dominated, completely dominated. Here, this move comes as China seeks to challenge the US dominance in global payments. Dollar-backed stablecoins currently account for over 99%, right, of the global stablecoin supply on-chain. So the US denominated stablecoins are completely dominating, over 99%. And this dominance has a market cap of 2.4 quadrillion. That's how large the market is. So the US is already dominating that huge, the largest market in the world and the most liquid market. And on-chain, the US is by far has a 99% market share already. Before all the tokenizations started, before all the stable coins are starting, before tokenized of assets, like we say, real world assets, on-chain, all these different asset classes, real estate, commodities, bond market, and will need to be paired with stable coins, right? So this just shows you the potential of how much liquidity that is about to hit this market, 2.4 quadrillion. So let's go back here. 2.4 quadrillion is this market, but right now it's only at 270 billion. So even if you 10x from here, you only come to 2 trillion. If you're at 2 trillion, it takes you another 1000x to get to 2 quadrillion. So that means 10 times 1000, that's 10,000. So to get to the 2 quadrillion, it will take us a 10,000x from where we are today at 267 billion. And predominantly, it's on Ethereum already. So that means that over 60% of all of that liquidity is already on Ethereum. And that means if 60% of the 2.4 quadrillion hits Ethereum, even just a fraction of it, this shows you what is coming our way, community. This is just to show you how this is coming our way. And this is not wishful thinking. Remember in this article how we read about how we're in a need of let's go back here. I always like us to refresh our memories. The world is more fragmented and complex than ever, but the need for a platform. There's no multiples here. They're talking about one platform that brings together business, government, and society. Has never been greater. We need one platform, right? We read this. And then in this other article, it was talking about how, let's come here. The key difference includes a shared system of record, which is the ledger, flexible custody, programmability, and fractional ownership, right? Where does this, it talks about one system, one blockchain, one platform, one ledger, and we just saw where all these products are being made, right? All these fractional assets we just saw here. They're making these fractional assets, and they telling us and justifying why did they pick tokenization to be done on Ethereum. It's because it's maturity, it's global reach, and it's proven security. So this is not wishful thinking. This is real world happening right in front of our eyes. And if we are aware of what we have or how early we are in this space and what type of the amount of liquidity that is about to enter, it's 2.4 quadrillion. Our minds can't understand how large this is. And that's the liquidity that is getting ready to hit Ethereum predominantly. But that's not all. Let's now move over to the bond market, Treasury market. The Treasury market is also another large and liquid market as well. Right now, we are sitting at 7 billion. That's how the Treasury market is. And this 7 billion, let's look at where is the market predominantly. This is 75%. This blue, this Ethereum, as you see. So not only stablecoins, but now also treasuries, tokenized treasuries are predominantly, as you can see here, on Ethereum. Now let's look at, again, 7 billion. How large is the treasury market? The size of the bond market was estimated to be 119 trillion. 119, and 46 trillion is in the US, right? Just the US alone. So let's come back over here and look at it again. 46 trillion is in the US, but we are sitting at 7 billion right now. So just to get to 7 trillion, it will take 1,000x from here. 7 trillion. So that means, and we still have 49 to match 49. So that's another 7 times from there. So that's 7,000x. But if we just say we want to get to 7 trillion, not even 49, just 7 trillion, that's another 1,000x from here. That means 1,000 times more market cap, more liquidity, more volume that is about to hit this place. And predominantly, all of that takes place, 75% of that on Ethereum. So not only do we have 2.4 quadrillion, like we see here, not only do we have 2.4 quadrillion, as we see here, coming to Ethereum through stablecoins, the Forex market, but now we also have In terms of bond markets, tokenized bonds, 119 trillion. All of this, specifically 46 trillion, coming on Ethereum as well in terms of liquidity. So whenever we talk about the liquidity that is about to hit Ethereum, this is what we mean. So this is happening right now, and it started with the appointment of Larry Fink, the chairman of the World Economic Forum, and he's a big fan of tokenizing assets. We just watched a short clip at the very beginning how he's stressing that the SEC should approve tokenization of stocks and treasuries. Why? Because that's the future. That's the future. And the challenge right now is the world is fragmented and complex than ever before, but there's a need for one platform. And that platform they already chose. And that platform of choice is Ethereum Community. How does this affect us as an industry as a whole? Ethereum is the largest smart contract blockchain. So naturally, it's going to bring on-chain tokenization, stablecoins, real-world assets are going to come predominantly, majority on Ethereum. Of course, it's going to hit other blockchains as well. However, as we saw, predominantly majority, between 60 to 75% of all of that is taking place on Ethereum, one platform. That's the choice of DSB, the largest bank in Singapore, the choice of Blackrock, JP Morgan, Visa, MasterCard, UBS, Post Finance, Swiss government. They all chose Ethereum because of what? Maturity, global reach, and security. Those are the reasons why. So to close out this session today, community, let's come to this. In 1944, there was not something known as the Bretton Woods Agreement, and this agreement established a new international monetary system, and it was based on gold, right? And because US came out of World War II as the nation with the most gold reserves, global gold reserves, they were appointed to become the global reserve currency. Now, same thing 80 years later, instead of the US dollar crashing, crashing and getting the same fate like the Romans did, like the pound did, the dollar, the Deutsche Mark did, and so on and so forth, they are entering a new digital space, like we just saw, where they're dominating the foreign exchange market, which is a 2.4 quadrillion market, where they're dumped by 99%, like we just saw here. Let's go back again. The dollar is coming out of or entering this new digital age by dominating dollar-backed stablecoins with 99%, over 99%. Global stablecoin supply is US. And this is a market that actually is as large as 2.4 quadrillion. And it takes place predominantly on the Ethereum blockchain. So do we ask ourselves now, why do we think BlackRock and JP Morgan are creating collateral assets, tokenized assets, collateralizing them, tokenizing them, building infrastructures, products on Ethereum? Why do we think DBS, the largest bank in Asia, in Singapore, is also choosing a public Ethereum blockchain to build their infrastructures and offer their products on? It's because it is the most secure, the more matured, and has the global reach, the security, and has the most developers, has the most liquidity in it, and there's one leader, one winner in it. One winner takes it all. And like we just saw, the same thing takes place for treasuries, tokenized treasuries as well. So if we close this session for today, what are we saying? What's the takeaway? The takeaway is that we're about to being hit with large liquidity. We just see that there's an over 90% chance that next month in September, there'll be finally interest rate cuts. Up to 1% interest rate cut is on the table. We all know what that means. That means cheap money, easy money. Tokenization bill was just launched, was just issued. The bill was signed already. What we're waiting for is more clarity, the clarity bill and structure bill, market structure bill. All of these pro-crypto bills are getting ready to be signed before or by the end of the year. Once this happens, it opens the floodgates for so many things, such as, like we said, stablecoin institutions being able to launch their own stablecoins. They'll be required to purchase digital treasuries, digital bonds, which BlackRock is offering already to back their stablecoins with. Right now, the US dollar denominated stablecoins dominate by over 99%, meaning that in the global race, digital age of this global race, once more, just like in 1944, the US is at the forefront. They dominate a 2.4 quadrillion market, the Forex market. They dominate the second largest asset class, which is bond market, and BlackRock is at the forefront. So Larry Fink is not just at the forefront with BlackRock, the asset manager, but he's now also the chair of the World Economic Forum that stresses on and talks about the future of global finance being tokenized assets, like we've read here, right? Talking about how tokenization is transforming global finance. And it's led by none other than Larry Fink himself. So liquidity is about to hit our markets. And the blockchain of choice is Ethereum, like we saw. And all of our three tokens are on Ethereum: Survivor, Killer Whale, and BULLRUN. And with that said, meaning that rising tides lift all boats. So because we're on Ethereum, that alone is going to lift all of us, all of our tokens up. However, the most benefit will benefit the tokens that are addressing the four challenges we always talk about. Is your ecosystem retaining liquidity that is about to come? We saw 2.4 quadrillion just in Forex alone, stablecoins, and 119 trillion, 46 to be exact, just the US alone, also come on Ethereum predominantly. Now, don't you think you need a platform that retains all of that liquidity, most of it? Also, we are addressing inflation. So do you have an ecosystem that is actually scarce, let alone deflationary, but scarce? Staking plays a major role because it's a proof of stake blockchain. So do you have a platform that is literally providing staking distributions in an efficient manner? And then finally, do you use your volume efficiently? These are questions we should ask ourselves as we await all this liquidity rush that is about to hit us, community. And if you can find yourself an ecosystem that is addressing all these four challenges, you are set for the maximum rewards and the maximum benefit to make the most out of this liquidity rush that we're about to experience. We need to go through this only once, community, and it will be the largest event and the largest wealth transfer, the largest liquidity event in the history of finance, because a whole new monetary system is being established right in front of us. This one is outdated. It's 80 years old. So now there's need of an upgrade. And these are not my words. We just saw it here with the World Economic Forum telling us what we just talked about. And it's telling us right here. Let's close out with this. It tells us that technology developments in financial markets have always moved more cautiously than other industries. Financial infrastructure operates in much the same way it has for decades, relying on the same message-based system pioneered in the 70s. Distributed ledger technology can bring our capital market infrastructures into the 21st century by streamlining and automating manual and time-consuming processes. So, smart contracts, this is the business case. Smart contracts, automated processes makes the difference, right? And you can only do that on smart contract blockchain. And the largest smart contract blockchain is Ethereum, which will be shorter settlement times, improved liquidity, enhanced efficiency, like we say, 24/7 market operations, and we need a new infrastructure backbone. And this is exactly why Ethereum was chosen, to build all the infrastructures on it so that it can lead the way to become the global reserve asset that we all look forward for it to become. And we need to set ourselves apart and set ourselves to make the most out of it. And the best way to do that is be part of an ecosystem that is actively addressing the four challenges, which is lack of liquidity, inflation, unsustainable staking distributions, and efficient use of volume. Community, this is it for today. I hope this message came across well, and I hope that we all can take advantage and set ourselves apart based on this knowledge. That is my personal opinion. None of this said today is financial advice. Do your own research, and let's use these sessions as a point of reference to understand what's coming our way, and so that we can best position ourselves for what's coming. We only have to go through this once to have a life-changing experience. With that said, community, I want to wish you all a wonderful, wonderful rest of the week. For the Queens, tomorrow is Friday. I wish you a wonderful session, as always, that you have. For the Queens, I want to thank you, Queen Lillian, Queen Debbie, and Queen Val, for an amazing session you had yesterday on Wednesday on YouTube. We're all very grateful. We appreciate you all very, very much for all your inputs and contributions. With that said, I want to wish you all a wonderful rest of the week. Till we meet again, community. Bye-bye, everyone.